Let's discuss a little bit your revenue and break it down. This is a chart on the Bloomberg. The function is FA-Go. You can just see that in the first half of this year, office property investments paid off the most. We followed by, say, retail, residential property investments as well. Just break it down for us, for our viewers. Where did you perform best? Was it Hong Kong, Mainland China? I know that you also have investments in the U.S.
Well, we had a very solid performance across all parts, all geographies and all sectors, Sherry, so we're really pleased about that. I mean, obviously the first half results were skewed by the tremendous sales that we booked on the trading of Velasio that we've been selling in the last couple of years up in the mid-levels. And so great trading profits in the first half from that. But actually, I think the positive to take away for us was the trends we're seeing in the office and the retail market, both in Hong Kong and in China.
Talking about some of those sales, basically your business, your residential project pipeline right now is shrinking. So would you consider buying more aggressively in Hong Kong?
We're always looking to do more in Hong Kong on the residential trading side, as we are overseas. We've got a great residential trading brand. So yes, if we can find something that fits what we like to build, we will definitely be doing more.
When you say overseas, where do you mean?
Well, we've got a small project over in Singapore. We've got an office that's looking for things in Jakarta on the residential side. So, you know, Southeast Asia looks interesting, and you know, I wouldn't rule out China over the short to medium term.
Guy, it's Betty here. You mentioned the Hong Kong market, and you're quite enthusiastic about both the office and the retail. I just want to bring up a chart, though. It does focus on residential, but I just want to bring it up to make a larger point. It's 8818 here on our Bloomberg, and it just shows you just the median household income in Hong Kong has barely budged, but you've seen residential property prices rise over 200% since 2001. So, you know, it's getting more and more unaffordable in Hong Kong to buy any kind of property for yourself to live in. And I'm curious how you think that might spill over into the larger economy and into some of your retail properties if people have less and less money to spend.
Well, I think what we're seeing this year, there's still demand out there in Hong Kong. So prices are, as you see on the chart, they're continuing to go up. We're obviously pretty much out of the residential market now, having finished all our mid-levels projects. We've still got a few units in White Sands to sell. But after that, as you say, we're pretty much out of the residential for the time being in Hong Kong.
Right. But the reason why I asked, though, Guy, is that here in the U.S., and I know you've got some properties here, in Miami, and it's a small portfolio, but in the U.S., you've just seen sort of, Amazon taking down a lot of the retailers, right? The brick and mortar stores, and you're seeing malls turn into ghost towns, essentially. Is there any hint of that kind of trend over in Asia, and particularly in China and in Hong Kong?
Well, I think if you look at our retail sales in China, they've been growing double-digit in the 4 locations that we're in. So we're absolutely excited about the prospects. The current situation looks great, and we built
even with online retailing becoming more and more popular.
Well, I think you're seeing growth in online. You're seeing good growth in offline in China, and why is that? Well, we've built some great properties that are focused on Chinese consumption, and middle-class consumption is a wonderful bet, I think, for now and for the future.
How about offices in Beijing and Shanghai, though? They're not doing as well as they're doing here in Hong Kong. Why is that?
I think there's more supply constraints in Hong Kong, but the office market here has been very strong, and you can see that in our results. We're really excited about this new this decentralization theme, which I think you've seen in London, you've seen it in New York. I think you're starting to see it come on very strongly in Hong Kong. And so Taikoo Place down in Quarry Bay is really going to be a good beneficiary of that decentralization.
And I know that Betty was talking about these soaring property prices here in Hong Kong. But of course, we are also seeing Chinese authorities clamp down on prices in mainland China. Are you expecting more of those measures? What are your expectations for the market?
Well, I think our expectations on the market for residential is certainly going to be that stability is good, and I think what's going on in China is they're trying to make the market more stable, and that's a good thing. But as we said earlier, we're not in the residential market in China, but we're very focused on the retail market, which is going great guns for us at the moment. We're opening this year in Shanghai, which will be our fifth project, our fifth major investment, and that's retail-led. In Nanjing West Road in Shanghai, and we're extremely excited about how that's going right now.
Guy, I'm curious, just bringing it back to the U.S. market, and particularly in Miami, how are your properties doing there?
Well, the mall opened late last year, and so far so good. It's building up very nicely. We've got some great anchor tenants anchored around Saks Fifth Avenue. The CMX movie theater's just opened, and we've just got the Apple store going. So the anchors are bringing the footfall in. Right. And we're seeing a real transformation in Miami. I mean, it's a game changer for that city, is what's going on in Brickell. Yeah. On the office side over there, we're pretty much full. It's a strong office market. Condominium sales are slowing down, mainly driven by the strong dollar. Right. But, you know, we're two-thirds sold on the condo side. So things are looking good in Miami, and we're really optimistic about that city.
Pretty incredible, right, after the financial crisis, how the property markets have turned around in Miami. So I'm curious, just taking from that base, though, are you looking to expand to other cities in the U.S.?
The short answer is no. We've got a lot to do in Miami. We've got a great story going there, and there's lots more to come that'll carry us through the next 5 to 10 years.
When we're talking about your properties, you've been trying to diversify your tenant base, and I'm talking more about Asia. How's that hit your rental income so far?
Well, it's good. I mean, on the a diversified tenant base is a healthy tenant base, and we make a strong point to try and make it diverse, both geographically and sectorally.
What's your target tenant mix then?
Well, we don't have a target percentage. We just like to have good balance.
Good balance. Is that because we're seeing luxury brands exit, more of them exit Hong Kong?
Well, actually, what we've seen in the Pacific Place sales figures the year to date so far is luxury is actually starting to turn around in quite a nice way. It's had a tough couple of years in Hong Kong, as we all know, but the Pacific Place sales figures look really encouraging. I would emphasize it's not just in the luxury sector. Obviously, we've tried to improve the lifestyle content there, and the food and beverage changes that we've made have really started to kick in. We've just launched a tremendous loyalty program called Above in Pacific Place, with fantastic private lounge and great rewards. So, things are starting to, the buzz is coming back, I think, in Pacific Place, which is exciting to see.